Good evening, participants, and thank you very much for attending our webinar. I wish you all a very happy New Year as well. So let's kickstart into the webinar. Yeah. So we'll start with the portfolio performance across our funds. Starting with Coffee Can. So if you look at the returns for the month, it was about minus 0.9. The top performers were Ashok Leland, ZF, and Zydus Wellness. In terms of the bottom performances, were Hitachi, Interglobe, and LG Electronics. Moving on to Good and Clean. So Good and Clean, if you look at this month's performance, it's almost 0.8%. And if you look at the 3-month performance as well, the fund has really come back strongly. The key performers for the month were MCX, Ajanta Pharma, Manappuram Finance. The key draggers were Aegis, Timken, and Bharat Electronics. Moving on to Micro Marvels. So in the month of December, the fund gave about 0% returns, whereas the benchmarks were sort of negative. In terms of the top performers were Ice Make, Cantabile, and Didev. And the bottom performers were Khadim, Landmark, and Platinum. So if you look at the Ambit pricing versus performance, it was minus 0.8 for the month. In terms of the top performers were Ashok Leland, ZF, and MCX. And in terms of the bottom performers were Hitachi, Interglobe, and LG Electronics. Yeah, so moving on to the topic of the webinar, which is the Indian auto sector, why we believe that it is a structural shift. So if you look at the sector in general, it has been one of the best performers since April. You can clearly see from the first slide on the presentation, which is on the top left-hand side, the right worm, which is clearly moving much better compared to the black worm. Obviously, the known fact is the GST cuts which were announced in the month of August. Clearly, auto has been by far the disproportionate beneficiary of the GST cut. And if you look at the slide on the top right-hand side, you can see that post the month of September, there has been a significant growth in terms of both two-wheelers as well as four-wheelers. The volume growth has been in strong double digits. So clearly, the GST cut has added fuel in terms of the demand environment, and the price cuts across various ranges have been fairly high in the range of 7 to 10%. So clearly, on the back of price cuts, the demand seemed to have really taken off. Now, if you look at the past years when there was an indirect tax cut, what we understand is that the demand frenzy has actually stayed for a fairly long time. So, if you look at the last 10 years, there have been two phases when the indirect taxes have been cut. And since the time they got cut, the demand remained buoyant for at least 12 to 18 months. So what we are trying to say over here is that given that the GST cut has happened in the month of September, we believe that until December, at least next year, the auto demand should ideally remain fairly buoyant if we go by the historical precedents. But clearly what we are seeing, if you look at the slightly long-term picture, so if we move on to the second slide, on a structural basis, we believe that the Indian auto sector is at a very significant inflection point. So let's look at what happened in China. So If you look at the year 2007, which was the year when the GDP per capita in China was close to $2,500, there was a significant tailwind which the auto sector went through. So, if you look at 2010 in China, the car ownership in terms of cars owned per thousand population actually almost more than doubled since 2007 to 2010 in China. So there were about 17 cars which were owned per thousand population, and in a matter of 3 years, that actually increased to 43. And more importantly, it actually increased to about 153 in 2019. So from 2007 to 2019, actually the car penetration increased more than 6x. Now, why is it relevant? The reason why it is relevant for India is because if you look at the GDP per capita in India, in 2023, India's per capita crossed $2,500. So clearly, if we were to look at what happened in China, in India also we are seeing a very similar trend. So if we just go back 5 years, there was significant demand coming in for entry-level models like Alto, Wagoner, etc., etc. But as we sit now, we see that trend moving more towards SUVs. In fact, more than 50% of the new cars sold are sort of SUVs, and SUVs, as you know, are at a much punchier price point compared to the entry-level models. So if you look at the average price point for SUVs, it's in the range of 15 to 20 lakhs, whereas for entry level, the price range is in the range of 5 to 7 lakhs. So we are seeing initial signs of premiumization happening in the Indian auto sector, and clearly similar things happened in China when we were at a similar per capita. In fact, within SUVs as well, if you look at some of the features which are now coming in, clearly that suggests that the Indian average customer is willing to pay a sort of a premium price for the kind of features which are being showcased. So if you look at ADAS, ADAS as a feature is now very, very popular. And in sort of 25 lakh cars, you'll see that feature being featured very commonly. So what we are trying to highlight is that clearly the Indian auto sector seems to be on a structural tailwind, whilst the GST cut does help the sector in terms of tailwinds. But we believe that there is more sort of fuel to the rally, and as we sort of graduate on the per capita ladder, we should see more and more sort of premiumization coming in, and alongside that, the penetration also rising. So clearly, if you are of the view that the per capita for India is likely to sort of be on an inflection point, then Indian auto sector is one of the spaces which one should be owning. In fact, there's another catalyst as well in terms of the eighth pay commission, which is likely to see implementation in the second half of this financial year. So if you look at the earlier pay commission disbursements which happened, so if you look at the sixth pay commission disbursement which happened, post the disbursement, there was a significant rally in terms of the auto volumes. So you can see the two rectangle boxes, which shows that post the disbursement, there was a significant pent-up demand. So clearly, as we are looking at disbursements happening in the second half of FY27, there is another tailwind which is likely to sort of help the auto sector. So net, what we're trying to summarize in this slide is that the inflection point in terms of per capita alongside the 8 pay commission payouts and obviously the recent GST cuts are big catalyst as far as the Indian auto demand is concerned. Moving on to the next slide. Also, we are seeing simultaneously significant developments happening alongside the road infrastructure. So, if you look at Mumbai itself, we have seen significant improvement as far as the road infrastructure is concerned. So, we've given examples of the coastal road where the communication time or the travel time has significantly come off. We've also sort of given you some pictures in terms of the national highway. So, Mumbai Nagpur historically used to be a road journey in excess of 18 to 20 hours. Now, thanks to the Samruddhi Mahamarg, the distance has actually become almost half, and within 10 to 11 hours, you can travel from Mumbai to Nagpur. And the reason why the road infrastructure improvement is very critical is because it will significantly lead to rising demand for not only better mileage cars but also high speed cars. So you are seeing that the average speeds across the highways, which were earlier 50, 60 kilometers, are now increasing to 80 to 90 kilometers. So clearly, from a better road infrastructure perspective, India is actually ticking the right boxes. And to that extent, not only across highways, but across major metros as well, we are seeing a lot of work being done on road infra, and which will result into significant increase for better performance in terms of high speed as far as the cars and the two-wheelers is concerned. Also, we are likely to see a significant up move in terms of the fast tag. So, post of fast tag, the wait time at the toll stations have significantly declined. But now the government is looking at a barrier-free tolling system, which you would have seen in developed countries like Singapore, etc., where you don't have to stop. Basically, there will be sort of an electronic barrier which will be above your car, and as your car moves below that barrier, the toll will be automatically deducted. So, such kind of systems will further improve your speed time, and as a result, typically the traffic can move from a railway towards roadways, because the travel times will start coming off, and all this will actually help in terms of boosting the demand as well as the car penetration. Moving on. Also, what is happening in India is that across sort of luxury cars, we are seeing a very important trend. Generally speaking, about a decade back, you would have seen that luxury cars were fully imported, meaning that there was no manufacturing happening as far as manufacturing in India is concerned. But of late, we are seeing more and more luxury car owners setting up a manufacturing footprint into the country. And as a result, what has happened is that the cost of manufacturing has actually started coming off significantly. Now, what happens in India is that there is a steep import duty on luxury cars when these cars get imported. But as they start getting manufactured in the country, obviously the cost of manufacturing reduces. So if you look at the table on the top, you can see that Range Rover, when they started doing localization, there was a significant reduction in terms of price points across various models. So a model which used to cost 1.7 crores actually started getting available at about 1.4 crores. So there was almost a 15% plus decrease in terms of price points. More importantly, it also helps in terms of supply chain efficiency. So generally with these premium cars, whenever there is a breakdown, generally there is a waiting time as far as availability of key components is concerned. And resultantly, with a lot of luxury cars, we've seen waiting time of at least a month before which those critical components are received, and the entire experience of owning such a car becomes very painful. Now, with local manufacturing getting set up, what happens is that the availability of spare parts really improves significantly. And that actually enhances the customer experience significantly. And hence, one tends to sort of have a very good experience owning these luxury cars. So, both having a supply chain as well as reduction in cost because of higher localization actually helps in terms of owning these luxury cars. In fact, what happens now is that the customer mindset is now also changing. So, with the price points coming off and supply chain improving, people no longer are just chasing mileage. So, in fact, when we speak to a lot of car dealers, they say that earlier the customers used to come in and ask kitna deti hai, but now they ask kya kya features hai. So to that extent, the customer mindset is clearly shifting from sort of just about mileage to what the features are, and that is the common thing which is happening not only across four-wheelers but also across two-wheelers. So if you look at Royal Enfield, that is a classic case study. Royal Enfield was one of the companies which actually pioneered the localization of manufacturing in the country, and selling the bikes at far attractive prices compared to, say, a Harley Davidson, etc., etc. So obviously, at a reasonable price point with better supply chain efficiencies in terms of availability of spare parts, clearly they have created a significant pull as far as the customer is concerned. And likewise, in four wheelers, now we are seeing incrementally more and more cars coming in with sunroofs. Because we have a local sort of company which is manufacturing those sunroofs. So as a result, you can see that the penetration, which was just about 4% in FY17, has significantly inched up to 40%. So now every second SUV or even a MPV is coming up with a sunroof. And also, as the supply chain becomes more and more efficient, you are seeing more and more panoramic sunroof also getting launched. In fact, Maruti, which was never sort of the opinion that they would require a sunroof, has also now started launching a sunroof. So what we are trying to highlight is that in India, if you give a product offering or a product feature at an attractive price point thanks to localized manufacturing, and also if you provide good availability in terms of spare parts to a better supply chain, then as an Indian consumer, the consumer is happy to pay a price for that, provided the same is available at an attractive price point, as well as in terms of spare part availability. You can also look at the chart on the right hand side bottom, which shows that incrementally the ADAS system is becoming also more and more popular, though the penetration is still into low single digits. But if you look at the pace at which the penetration is rising, it is phenomenal. It was not even 0.1% in 2021, and suddenly it has jumped to north of 2%. So what we are trying to highlight is that clearly, as the per capita moves up the ladder, people are wanting to sort of demand more and more features as far as four wheelers and two wheelers is concerned. So clearly, there are more and more legs to the auto sector. Story is just not a volume growth, but also increase in realizations, which will actually help in terms of the sector seeing a significant interest. In fact, as more and more premiumization happens, you will see more and more margin improvement as well across auto, not only as a sort of four-wheeler, two-wheeler sector, but also within the auto and ancillary space. In fact, we've seen a lot of auto and companies put in significant capex over the course of last 2 to 3 years, and more and more sort of capex is put into areas where more and more R&D or technological tie-ups are required. So clearly, as a sector, both auto as well as auto anch are very, very sweetly positioned, and we as a house continue to remain extremely bullish on this space. In fact, within the auto ancillary space, we are also seeing more and more capex happening towards newer areas like industrials. Also several component companies are showing interest in terms of increasing export opportunities. So clearly, as a sector, it is positioned in a very favorable way. So, generally, what we understand is that people are looking at auto from a transient perspective, or just sort of a tactical bet, which is on the back of GST. But we believe that there are a lot of structural tailwinds towards the sector, given the rising localization, given the GDP per capita at which we are sitting. So we as a house continue to remain very bullish, and across our strategies, we have a decent position both across auto as well as auto anchor.